and welcome. Global markets and investors have been rattled after US President Donald Trump has stated the ceasefire with Iran is now over. Well, to decode what this means for stock markets, for oil prices, and for global economies, I'm joined by senior economist and founder of Nikore Associates, Mitali Nikore. I'm joined by global oil expert as well as CEO of AustraliaTrading.com, Peter McGuire, and Feroze Azeez, joint CEO of Anand Rathi Wealth. Thank you so much, all of you, for sparing the time, really. Peter, given the fact that we have seen a massive spike in oil prices of over 5% in just one trading session, does this mean long-term pain for oil prices going forward?
Well, Sakshi, and good afternoon. It's so hard to really unpack and appreciate the dynamics of the market. The market's live. The market lives on sentiment and geopolitical, rumblings or large noises. And we've had a large noise in the last 20 hours. President Trump, what's happened in the matter of probably in the last 3 or 4, he's saying there's no deal. It's all over. And this is going to be, again, fascinating how this plays out. He is not sitting back this time. He's very much on the front foot. The market is interpreting that data and that information. And as you mentioned in the intro, it's up 6%. And the way it's looking, you got 78.50 for Brent. I wouldn't be surprised to hit probably 80 over the New York trade tonight. Again, how long this lasts for and what we look at from a retaliatory standpoint. Is Iran now going to ratchet things up? Where does it move? It's uncertain, and everyone thought that we were heading to 60, and now here we are approaching 80.
We're approaching $80 per barrel in just one trading session, is what you're anticipating, given the fresh tension and escalation. Feroze, for investors really wondering, what should they be looking at now? Remember, for the longest time, they thought they were heading towards stability. In particular, the small investors. Should they brace for a prolonged sell-off and period of volatility now?
Sakshi, I think like you rightly alluded, what should an investor do? I don't think investors should worry at all because India has thrown up the least volatility in the world. If you actually calculate standard deviations of Nifty and compare it to the S&P 500, which has got 500 stocks, Indian Nifty has 50 stocks, 1/10 the number of stocks. But if you put it on an Excel sheet, you will realize that it has thrown up 6% lower standard deviation than S&P 500. In terms of perception, India might be far more riskier. Nifty went down on 30th of March to 22,313. That was the least level after the war broke out. Now we are at 24,000, right? Last 3 expiries, we have been somewhere thereabout. So what should an investor do is use this as an accumulation phase, because it could very well be a part of a negotiation between the US and Iran. Right? Iran has lost their supreme leader. The son is on the helm at the helm of affairs. So to negotiate when you've already offended that group so much that the person's supreme leader is gone, it's going to be, of course, a tussle. Now, the Nifty has corrected 500 points today. That's not a small number, right? But I personally think since Nifty's top 50% is banks and IT stocks, both of them are rogered. They're all at their lows. Okay, so when the 50% of Nifty is at lows, you don't have risks which are astronomical. 10% fall in the market, 2,000 points fall on Nifty is business as usual. Every year market falls that much. You look at last 26 years data, every year market falls 14% from peak to trough. All you have to worry about is astronomical or catastrophic falls, and that, to my mind, is one of the lowest probability event. And that's what I said.
So you're saying there's no need. Right. So you're saying there's no need to panic just yet. Is that what you're then saying?
Definitely not. Last week we were lower than this.
Right. Prudence over panic, Mitali, do you agree? Does this signal a deeper risk then for world economies, in particular for India, given the massive spike in oil prices?
No, absolutely. Thanks, Sakshi, for having me on your show as always, and completely agree with both Peter and Feroze that, right now it's too early to really predict how this is going to play out. But I think we have to remember the pattern that Donald Trump, the president of the United States, has followed. He always uses this tactic of putting pressure on the opponent first, and he always threatens war to put that kind of pressure, or he always threatens escalation. But I will explain how this actually impacts the real economy, not only the financial economy. And when we think about it, see, these are real threats for exporters. And exporters have been battered in India for the last 1.5 years, ever since Donald Trump put his illegal tariffs on India. So we have been experiencing a 50% illegal tariff for nearly 8 months, and that has been harming our exporters. Secondly, and now we're back to the uncertainty phase, even though we are talking about a US-India trade deal. Secondly, we're also coming into a situation where other economies like the UK, the EU, Australia, New Zealand, a lot of these are important economies for India to do business with. Now, we have been going and signing free trade agreements with several of these countries, but with his actions impacting the global economy, he's essentially creating a slowdown across the world. The more uncertainty, the less people consume, the less people invest, the less people have a outlook on the economy which is optimistic, and therefore less investments means less jobs, less businesses, less innovation. And we get into a inflationary spiral, we get into a slowdown economically. So this affects real people. People in poverty are impacted whenever the cost of fuel goes up. Women are very badly impacted every time when you have these kind of situations, when trade goes down, when the economy goes down. So we really have to understand that what he's doing with these announcements and with this geopolitical discussion that happens somewhere else, it's always the most marginalized and the real people in the economy, the real working people who are impacted.
Absolutely. The marginalized suffer the most. A lot in wait and watch at the moment. Thank you so much for decoding the initial impact that oil prices, stock markets, and the economy has witnessed as of now or is likely to witness in the next few days. Thank you so much.